TradingWith101. In this video we will be analyzing the fundamentals moving the gold for the next week, which is from 3rd till 7th August. So let's begin. The bearish fundamentals would be if we see any movement or any improvement in COVID situation such as vaccines trials being successful or a vaccine or a successful vaccine being made. Moreover, any fundamentals supporting the demand for the dollar and the supply of the dollar being shrink, such as Fed increasing its interest rate, which is in very less likely situation, such as its percentage of Fed increasing its percentage is some around the percentage of Fed increasing interest rate is some around 0.1 from 100. Moreover, we would be bearish for the gold if we see that the uncertainty in the market has been decreasing. Now coming on why we should be bullish for the gold, let me give you some overview. Is that the all bears in the gold could manage in keeping the gold prices down as the yellow metal bounced back on the Friday from a brief sell-off across the market, forced by the stock collapse of US gross domestic products in the second quarter. The gold mania, and after tentative clearing of $2,000 level, traders are starting to doubt whether a profit-taking pullback is in the card. Moreover, we have seen that furthermore the December gold hits its record high of some around $2,005.40 in Friday Asian session before the start of European and US trading. And the Friday rebound come as a passage of a new 1 trillion COVID-19 virus relief bill by causing a panic and a fight between the Trump administration and the rival Democrats. It's on whether weekly benefit from the unemployment should remain at $600 or to be cut at the third that amount as the administration hope. The safe haven demand remains strong as the Congress and the White House are continuing to struggle to break the impasse on extending emergency unemployment benefits. Now, moreover, unpredictable US president and political tensions with many countries around the world, investors had plenty of reasons to abandon the greenback, which is also known as, or which is a nickname for the dollar, for the US dollars. Moreover, the nail in the coffin on Thursday was the Donald Trump suggesting to delay the 2020 elections, which is against the Constitution, thus creating uncertainty. Leading Republicans were quick to reject the idea, but investors fears that sitting president will try to delegitimize the elections in other way. This grim political and economical outlook for the US dollar makes it difficult to attract buyers. Moreover, the wires cases are tickling up higher and higher again in many parts of the world, and there are worries that recoveries would slow down, and the growth will continue its central focus next week with a busy economic calendar that includes 2 monetary policies announcement, 3 employment reports, and the Chinese data. Moreover, the investors will be eager to see the recovery in the manufacturing services, but the most important release would be non-farm payrolls. Moreover, the job growth recovery significantly in June after major loss in April, and the economists are looking for continued recovery in July, but at 2 million it would be a notable slowdown for the last month 4.8 million increase. Most of the new restrictions in the states with suffering from recent spikes in COVID-19 cases are not implemented until mid-July. So it would be interesting to see if the job growth slowed in advance of that. Moreover, the Goldman Sachs Group has said that the gold is the currency of last resort amid an inflation threat to the dollar. The bank forecasts a rally of $2,300. The Bank of America says the price could soar to as high as $3,000 an ounce, while JP Morgan sees the rally losing steam after this year. Now, summing up, the gold mania targeting 2000, we have seen in 1 trillion of bills, COVID-19 relief, the Trump administration, Democrats, the Congress versus Democrats, or the Congress versus the White House. Moreover, Trump threatening the political stability in the country. We have seen an unprecedented abandon of the greenback due to the economic conditions in America. Moreover, buyers are reluctant to buy US dollars. We have seen a tickling growth in the COVID-19 cases. Job growths are in focus. Non-farm payroll is in focus. New restrictions weren't implemented till mid-July, thus its effect could be seen. And we have seen that the banks giving a forecast of $2,300, JP Morgan giving a forecast of $3,000. That this whole scenario is concluding or is summing up to the uncertainty which will cause a effect on two things, which would be the safe haven, and the majority of the safe haven is the gold and the US dollars. Thus, due to the uncertainty, we can expect that the dollars could lose its stream or its value, whereas losing dollars or the depreciation in the value of the dollars would make the purchase of gold more cheaper. Thus, people would be eager to buy the gold in order to hedge their wealth, which would increase the demand for the dollar. Thus, explaining from supply and demand, the supply for the gold is limited. However, the demand for the gold is increasing. Thus, according to the supply and demand phenomenon, which suggests that the prices of the gold should increase, and we are expecting that the prices for the gold in incoming week would increase, and we can see that the prices could easily take down the 2000 target. In this part of the video, we will be analyzing the economic events from 3 till 7th August and how we can trade or take the advantage of these economic events in trading gold. So on Friday 5th August, we have ISM non-manufacturing PMI. So why traders care about it, as it's the leading indicator for the economic health. Business reacts to it quickly to the market conditions, and their purchasing managers hold perhaps the most current and relevant and seen in the company. So the forecast is 55. If we get numbers higher than 55, such as 57 or 58 or more highest numbers, we will be going for a short position for the gold. However, if we got numbers lesser than 55, such as 54 or 53, we will be going for long for the gold. Now after Wednesday, we do not have any economic event on Thursday. Now we have on Friday, which is August 7, which is the closing day for the market. We are having the average hourly earnings, and it's why traders care about it, as it is a leading indicator of consumer inflation when the business pays more for the labor. The forecast value is minus 0.5. If we get a value such as a positive value such as 1 or positive 2, thus we will go for a short position for the gold. However, if we get numbers greater than minus 0.5, such as minus 6 or minus 7 or more greater numbers, thus we will go for a long position for the gold. Now coming on Friday, we have another economic event, which is a non-farm employment change. So why traders care about it, as the job creation is an important or a leading indicator of the consumer spending, which accounts for majority of overall economic activities. And it is an vital economic data released shortly after the months, and the combination of importance and earliness makes for hefty market impacts. The forecast value is 1510K. If we get greatest numbers such as 1610K or more greaters, which will trigger an short position for the gold. However, if we get lesser numbers such as 14 10k or more lesser, we will go for a long position for the gold. Moreover, we also on Friday we have unemployment rate. Why is it important? As altogether it's generally viewed as a lagging indicator. The numbers of unemployed people is an important signal overall economic health. With labor market conditions, unemployment is also a major consideration for this steering the country's monetary policies. Thus, the forecast value is 10.5 for the unemployment rates. If we get numbers greater than 10.5, such as 10.6 or 11.1 or more greater numbers, which will trigger a long position for the gold. However, if we get numbers less than unemployment rate such as 9.6 or 8.7, this will trigger a short position for the gold. If you are new to the channel, so do consider subscribing, and if you like the video, do like, share and comment below, and do consider subscribing. Thanks for watching.